I'm Tom Herrick. I'm the Chief Investment Officer at Cary Street Partners. I'm here today with Katie Stockton, Principal and Founder of Fairlead Strategies, who works with our research and asset management team as essentially an extension of our thinking on technical analysis. It might be helpful to understand in your world what a chartered market technician is.
Well, I have to commend you for actually having the CMT input, technical analysis as a discipline, trying to understand price trends, momentum, overbought, oversold readings, and really when these trends are coming to an end. That's what we aim to do by evaluating pricing data, volume data, and also market psychology by means of sentiment data, breadth data, market participation, things like that. The drivers of these price trends can be fundamental or macro, and yet we have to have an understanding from a top-down perspective of the markets using these charts, and that will help us position going forward. It used to be something that may have been limited to hedge funds conceptually, but now, of course, we can open it up as an independent research provider to RIAs.
Right. As part of our collaborative effort, how do you help us manage risk in client portfolios?
I think it's understanding when trends that are existing are coming to an end. We have an ongoing dialogue about the markets and trying to understand what the downside may be if it's a weaker tape, and vice versa, what the upside may be. So we can understand from the charts, by looking at things like support and resistance and momentum, what the potential risk reward is from the marketplace. And that unbiased perspective can be invaluable.
Everybody talks long-term, is comfortable with long-term investing, except when things are not going well. And then they become very short-term oriented, which then leads to bad decision-making usually. So we're trying to deliver this short, intermediate, and longer-term versions of our market viewpoints to try to mitigate some of that emotional response to tough times.
The beauty of the charts really is that they can help you across all time frames, that multiple time frame analysis, where I can have an intraday opinion, much less, of course, a 3-year opinion on where things may go. Not to try to be overly predictive, but to understand what the prevailing trends are, and at least to have levels to watch to say, below that level we have greater risk of downside follow through. And it's really psychology driven, market psychology driven, and that's what we're trying to understand in our biases.
This isn't that hard to figure out intellectually, it's hard to do emotionally. You get a lot of bad decisions made at inflection points based upon
it's really the panic that drives those inflections, and of course to have any level of understanding of that and to keep that black and white perspective, not to get swayed by too many things, that whether it's the news or otherwise. I think to have almost a mathematical view of what's going on can help you eliminate that, or not maybe fully eliminate it, but at least manage through those highly emotionally charged times in the market.
You mentioned a phrase, hand-holding, which is a big part of our effort. We need to do that, and we take that responsibility seriously. Our effort and why we use this work and express it as viewpoints is because it's reflected in prices almost instantly.
And downdrafts are healthy.
Absolutely.
That's often what I say to folks when they're underway. And what they can do, of course, is keep a trend from getting too steep, to analyze them and to understand where the momentum is ready to kick back in.
Great. Well, thank you for coming. Thank you for your time. We very much appreciate it. And we look forward to working together for a long, long time.
As do I. Thanks.
Thank you.